Legal & General is one of the UK's biggest insurance companies. Its investment business manages about £440 billion worth of assets. I'm joined now by Nigel Wilson, Chief Executive of the whole group, to discuss the company's future plans. Nigel, thanks very much indeed for joining us. I mean, you've got such a formidable investment arsenal, really, and you've done a lot of investing in quite interesting new projects. Just talk us through the sort of new asset classes that you're keen on investing in.
Well, I think we've got to institutionalise all of the infrastructure asset classes here in the UK. We've led with student accommodation, but we're prepared to invest in many other asset classes, in energy, transport, health and education.
What on the energy front? That sounds really, really interesting.
Well, we're keen on political and regulatory certainty first. We're not very happy about the political debate that's going on in the energy sector, but we're more than willing to step up to the plate for gas-fired stations here in the UK. And we're currently doing some investigation around fracking. And
what needs to be done to get more sort of fracking projects off the ground, do you feel?
I think focus a bit more on the north of England, to be honest. There's a job shortage in the north of England. There are lots of opportunities for creating jobs and building infrastructure in the north of England.
And what about some other projects? I mean, you haven't really so far done much in the way of sort of rail or airports.
Both of those are on our radar. We did have a quick look at Stansted Airport, and indeed we own a lot of land around Stansted, about 750 acres of land. And so at some point we'd like to have an engagement with Stansted Airport about the expansion of that area. Similarly at Luton, we own 2,000 acres around Luton between the airport and the M1. And again, we'd like a big regeneration, redevelopment project which would create a lot of jobs.
Now there's been a lot of talk in recent years about sort of banks failing to lend to the wider economy. To what extent do you feel that the insurance industry could play a role here?
No, I think we're already the UK's largest institutional investor, and we're determined to play a much larger role going forward. We will step up and take over some of the roles that the banks have fulfilled over the last 20 years. The banking model, maturity transformation and excessive leverage is inherently unstable, whereas we provide long-term institutional capital. Some of the lending we've been doing recently is up to 50 years.
There hasn't been really much in the way of insurance companies doing any direct lending. What's certainly in this country at least, what do you think prevented that so far?
I think the banks, in a sense, it was an area that we didn't compete in for a long period of time. And one of the things I'm determined to do in the next 2 or 3 years is create a private placement market here in the UK driven by Legal & General.
To what extent would the US be a model? You hear a lot about UK companies having to go over to the US to borrow money, essentially.
Yeah, no, I think that's, and I saw that when I was a non-executive director of Capita, where Capita borrowed money from the United States. It's disappointing, to say the least, over the last 10, 20 years that we haven't developed this as a business.
And when you say the banks have prevented this, what do you mean?
Well, I think the whole focus has been on short-term lending by the banks in the economy with bullet repayments, which is the inherent instability, as opposed to long-term financing over a much longer period of time. And so that 7 to 50-year maturity spectrum is something that we're very interested in participating in and indeed creating.
And who would be the obvious clients?
Well, it varies. Clearly, the SME sector, not the very S of the SME sector, but certainly the larger SMEs will be good clients from us. Regulation is the other problem. I mean, we are in a situation where the regulators are having a tough challenge on how do they create a more stable financial system going forward.
What needs to change in terms of regulation?
The treatment of capital. In the sense we're not in the business already. We just have to make sure that the capital allocation doesn't lead us at a significant competitive disadvantage against the banks.
What specifically is it about the regulations at the moment that
No, we don't have a clarity on exactly how this asset class will get treated from a Solvency II point of view.
There's been clearly a big issue in the UK about welfare budgets coming under pressure. To what extent do you think the insurance industry could help provide an answer to some of these questions?
As a provider, to steal a term from Lord Turner, of socially useful products, we would like to play a bigger role in welfare reform. We've already done a great job in auto-enrolment and creating pensions for everyone, but there are many other products that fit that category where the state will not be providing as much of it going forward.
Would you like to see some kind of compulsory-esque private sector insurance?
Yes. I mean, we do it for motor insurance already. Pension auto-enrolment has about a 92% take-up. We'd like to make that move from soft compulsion to hard compulsion. But there are other products around long-term care and around rainy day savings that we would like to see introduced.
And how much would people end up setting aside?
No, I think it's very modest amounts. I mean, pension at the moment, the auto-enrolment starts in effect at 2% of salary, and it would be even modest for some of these products, perhaps, £10 a month.
And it pays out if you get sick, or?
Yeah, indeed, yeah. It's to, in a sense, look after people on rainy days and avoid some of the pressures that people come under to go to pay their loans.
Well, thanks very much indeed, Nigel Wilson from L&G. And you can get much more in the insurance sector on ft.com/insurance.